Hello everyone, let me introduce myself. My name is Ruben Martinez, and I am an algorithmic trader, capital manager, and also founder of the algorithmic trading community La City. Before starting this video, I'll answer some questions from Strategy Quant and thank them for this opportunity. I hope these questions, or rather this answer, can help some people improve their daily strategies or even change their mindset, benefiting algorithmic traders. So I won't go on any further. I have the questions here, all a bit analogical because I have written them down to answer one by one, and nothing. Let's get down to business. The first question is, how do I get started in algorithmic trading? And actually, this has been going on for about 8 years, and I am starting to realize the limitations of discretionary trading. I see that a scalping strategy that I used, well, I didn't know if it was really going to continue working in the future. So that's already starting to go around in my head, and I start to think about what would happen if that strategy stops working, how I could replace it, how I could apply more strategies and not depend on just one, how I could automate all of that. And I start looking for information. At that time, there was much less information about algorithmic trading on the internet, but luckily I started to pull the thread, and I began to train as an algorithmic trader, because what I was also looking for was to make trading a business. The next question is, how long did it take me to get results and how? Well, it actually took me years, because it was hard for me to understand. I'm a bit slow, and it was hard for me to understand that. Really, no matter how much I complicated things, I started to try to apply increasingly complicated things. Little by little, as I was learning, I tried to apply complex models. I tried, let's say, to complicate my life, because I thought that on that path of the more complex, well, the better or more profitable I was going to be able to obtain. So it took me a while to realize, or above all, it took me a while, yes, it took me a while to realize that that wasn't the case, and that really, no matter how much I tried to complicate things, more wasn't better, right? Better is better, they say. Well, in the end, that philosophy, when I changed my mindset and said, okay, I'm going to apply things that can really be simpler, but that work. That is, as far as I know 100% that they work, and I don't try to apply sophisticated things. Which doesn't mean that it doesn't work. But of course, when you're starting out, the rule of 2080 is already that you have to try to apply things, be very practical, and try to apply things that can really work, because if not, what normally happens along the way is that we burn out. And when I changed my mindset and said, okay, I don't want to be a trading researcher, what I want is to be a profitable trader. When I changed that mindset, and when I started looking at traders who were having results, or who were where I wanted to be, that's when those results started to change. We are also asked, what do I like most about algorithmic trading? Well, what I like most about algorithmic trading is that it fits very well with my philosophy or lifestyle. I like trading, and I like to research strategies, see what patterns are working. I like doing that part of the work. I mean, I'm not a person who doesn't like to do that, but I do like to have the flexibility part as well. That is, I like the freedom of being able to work 8, 10, 12 hours one day, and the next day, if I want to organize myself, not work at all. So that flexibility combined with the possibility of having everything automated, having everything based on data, that I know it's working, that I have the confidence of knowing that it's working, because what I'm applying is backed by data and not because someone told me so, or because I heard it somewhere. No, no, but it really is backed up. This is what I like most about algorithmic trading. That is to say, having or feeling that I have control over everything I am applying is, without a doubt, what I like most about all this. The following question is very interesting and asks about the data flow that I am applying today, and if I can share it. Actually, regarding the data flow, we could talk about technicalities here, but I think that is not the point. And we should do everything step by step, but what I would tell anyone who is working with Strategy Quant is to try to start from a targeted search or a real advantage. What do I mean by this? There are so many options when it comes to looking for strategies. And so if we open the fan when we are looking for trading strategies, as the combinations become larger and larger, the overfit or the over-adjustment or the ability to find a nice curve, but one that doesn't really work, is increasingly larger. So what is a good practice? A good practice is to do some preliminary work and say, okay, what patterns are really working and have a basis behind them. I'll give you an example. Gold, right? Gold, you enter on Friday, you buy on Friday, and you leave on Monday, and there is a pattern behind it. And it is that there is a bias that, in the end, the funds hedge themselves by buying to be covered during the weekend. So if you do that, you see that you have a certain statistical advantage, and we know that that works. Now that in its raw form doesn't make sense. It doesn't make sense that every Friday we are buying, and every Monday we are selling. Why? Because you can refine the entry much better, and you can build a strategy or trading system through that. How? Well, here, with a tool like Strategy Quant, which does this very well, with that advantage of entering on Friday and exiting on Monday, what you can do is create that final strategy with its stop loss, its take profit, its filter, a final strategy that meets a series of requirements and is robust, and that, in the end, is based on that original advantage. But above all, the workflow goes through there. We've done this in the community for years. I manage trading within our team and the LaCity algorithmic trading community. It's something I put a lot of emphasis on. And we basically focus on that, on sharing those previous patterns and offering them to the community so that people just focus on putting the focus on applying. Now we talk and we are asked about the philosophy of creating an optimal portfolio. Here I have to say that it depends on what an optimal portfolio is for each person. A diversified portfolio, in my view, includes algorithmic trading which ultimately explodes. As I was saying before, different patterns, different advantages, and in turn, it is also in different assets. That is very important because different assets, different advantages in the market. We have then different inputs and outputs. In portfolio management or when assigning weights, we use our own tool because, depending on the characteristics of each system, there is slightly less risk. We aim to make the portfolio as stable as possible. And for this, we assign a series of criteria to rebalance this. And for what purpose do we do this? To maximize returns? No. We do not only do it to maximize the return, but we also take into account the risk. And specifically, we like to measure it with the VAR and, above all, with the conditional value at risk, which is a metric that we like a lot for all this portfolio stuff. And we have our own style when it comes to building the portfolio and when it comes to rebalancing the weights to have a curve as stable as possible and apply based on this. The next question seems to me to be very well formulated and is whether I am using the strategies with Strategy Quant optimization, or if, on the contrary, I have my own criteria. I don't really use optimization as such. I don't optimize normally. What happens is that when we look for strategies in Strategy Quant, those values that we put randomly and those values that we look for through the software, it is already a way to optimize. So you could say that indirectly I do optimize in this way, but I don't focus on finding those values or those parameters that give the best results, but rather I try to find those values that are more stable and that can generate better results in the future. That is, I don't choose the best curves, I don't choose the parameters that are very sexy for my portfolio in backtest, but I try to focus on those values that can yield better results in the present and in the future. We are talking about drawdown now, and we are asked what is the robots. The truth is that this is becoming a very, very interesting topic of operation. Look, there is no better confidence than knowing exactly what you are applying. When I was talking about advantages before, when I knew before, I mean it's important to know the logic of your strategies. Not searching just to search and using systems that maybe don't really understand and function like a black box. So when you understand the patterns of each of the systems, that generates confidence because you are applying something that has been out there for many years that is working. And you internalize that, and with time, with weeks, with months, you already know how the systems work. That gives you some confidence, doesn't it? So when a drawdown comes, the first thing we do is check if the pattern has been broken or not. If the pattern has been broken, what we do is disconnect or quarantine those systems that are derived from that pattern. If, on the other hand, the pattern has not been broken or is not impaired and continues to function, then we do not do it. So you have to have, that is, we do more things within a drawdown, but roughly speaking, that is the most important thing. When a drawdown comes, if you don't know or you've created systems that are a bit, so to speak, crazy, it's very easy for you to get nervous. It's very easy for you not to know what to do, right? But if you know how the systems are created, and if you know how they behave, it's very easy to identify what's failing, what might be failing, disconnect, and always have a plan B. That always stops your operation. And above all, I always say, when faced with a drawdown, stay calm and do it slowly. In the end, this is learned with experience. And what should be said here is that what I have learned is, a drawdown is coming. Don't try to run. Don't try to go too fast. But on the contrary, stay calm. Now is when you have to stay calm and, above all, make these types of decisions based on a plan that you already have to, as I was saying, see and detect what is failing, what is not failing. If it's not failing and it's just part of a streak, it stays. If you are failing because a pattern has been broken, decisions need to be made. Are there any sources of knowledge that you would recommend to other traders? Yes, of course, there are many sources of knowledge out there. It is true that the information is increasingly such that it is a lot about things that are so basic and so old. I like to read books that were published years ago, or documents or strategies that were published years ago. Why? Well, that's very simple. And I like it, and I'm going to mention some authors like Larry Williams, Andrea Anger. For me, they are references. Kevin Davey, they are references within the industry. And there is even any strategy that is published a few years ago. And this is very simple, because if that strategy was published a few years ago, and you do a retest now, which can be done very easily in Strategy Quant, and you see that the strategy continues to work, that is a very good test for you to know that here you may have a pattern that is profitable. Because this was published years ago, and this happens a lot, right? Sometimes something is published today, and you realize that after 6 months it is not profitable, or maybe someone has looked for a strategy. But in the real market, you realize that it is not profitable, or that it has simply stopped working. But if someone published a strategy a few years ago, and it is still working, that is a very good thing, and it is a good indicator. It's a good place, it's a good tool, or it's a good strategy to start building your own strategies from that pattern that you're seeing in that post that you've found. I am asked the following: any advice to avoid doing algorithmic trading? If I had to give one piece of advice, it would be not to obsess over creating strategies without being very clear about what that strategy itself does. Focus on always trying, no matter what parameters you set, to make the curve go up and excite you. And I understand this because at the beginning it is like that, and the only thing we want is to try to apply things that are super profitable, and of course in the end we apply things that are profitable and that are very profitable. But the objective or the main purpose is not that. Focus rather on creating systems or strategies that are robust. And what do I mean by that? They are robust. That in the end, they do not depend on a specific parameter. That is, if you have an average of 200, your strategy has to work well with an average of 202, with an average of 198, with an average of 204, with an average of 126. It should work. Maybe not so good, but it should be finding something super specific that is very profitable. But when the circumstances change a little, it stops working. The more that circumstance changes and the strategy stays up and profitable, the better. Focus on finding those types of patterns because that is what will make the difference in the market, because the market changes and it is good that the strategies can adapt to those circumstances and can become profitable in reality, which in the end is what we want. They also ask me a recommendation that I think I mentioned in the previous question that perhaps raised my mind, and that is what to focus on. What would you tell them to focus on in algorithmic strategies? Well, what I would tell you to focus on is finding those advantages that are profitable, and especially in the part of workflow and risk. That is what I would tell you, that this is a totally personal and close opinion. And it is my own. It does not mean that it is reality or not. That is something that I have seen with many people, and that I see sharing opinions and so on. And there are like two currents. One current that tries to ignore many things that may become important, and another is like trying to complicate others that barely give return. And I can give you an example, is trying to focus on something that maybe the difference is going to be 0.5% annually, and spend many days, weeks and months on that, dedicate time to that, and in the end, well, yes, it is important, but it is not the most important thing in this period of time. The most important thing in the first weeks or at the beginning of the career of a trader, even more advanced, is to try to be profitable and then fine-tune things. You can fine-tune small things, but especially at the beginning, those are going to be details. Maybe it will make a difference, a little 0.51%. But at the beginning, as I told you before in another question, the rule is 20-80, because it is just like that. That is, if you do the basics, that will give you almost all the results. So focus on that, be patient, work with intention, focus on people who already have results. It is important that you take as references people who have results, who can also demonstrate it, and nothing more. I hope that some of these answers have been useful to you. And hey, at least I have tried. I have tried not to be too boring, not to extend myself too much in the questions. I do not want it to be boring. I do not want it to be too heavy. And nothing more. If you want to find more content about algo trading strategies, then visit my blog. I will leave you the link below, or my YouTube channel, where I am also there sharing content whenever I can. And thanks for watching this video. A thanks to the entire Strategy Quant community.